Hi friends, my name is Krishna. Welcome back to my YouTube channel. Today we are going to discuss about fixed assets accounting. This is in continuation to the previous video. In our last video, we discussed about asset class, how asset class has to be defined, and what are the other important accounts to be created along with asset class, like depreciation account, accumulated depreciation account, profit on sale of asset account, loss on sale of asset account. These are the accounts to be created along with your asset class. These are the topics we discussed in our previous video, right? So we are going to discuss about inputs required for fixed assets accounting, right? So what are the inputs required for fixed assets accounting? 1. Threshold for capitalization. This is an important topic to be discussed. What do you mean by threshold for capitalization? In almost every companies, what they do is they will fix a threshold for capitalization. Let us say X company wanted to capitalize their assets if the value of the asset is greater than $1,000. That means what? Any asset purchased less than $1,000, they don't show it as an asset. They will book it to P&L account. Clear? So what is the threshold there? $1,000 is the threshold fixed by X company. Similar way, Y company wanted to fix the threshold for $500, right? That means what? Any asset purchased over and above $500 will be capitalized. That means any asset purchased less than $500 will be debited to P&L account, and they don't show it as an asset in the books. So you need to go through the asset policy of that company to understand what is the threshold fixed for capitalizing the asset. That is very important. Clear? Right. Next one is acquisition / capitalization date. There is a slight difference here. What do you mean by acquisition date and capitalization date? Suppose if I buy a laptop, okay, today I purchased and I immediately started using the laptop. So the day I purchased will be an acquisition date, and my capitalization date is also, because I put in use on the same day I started using the asset. So my depreciation has to be started calculating the day I purchased. So acquisition date is my capitalization date. Is it the same always? Not exactly. Let us say I purchased a plant and machinery for $1 lakh. I purchased a plant and machinery for $1 lakh. This I purchased it on 1st January 2022. This plant and machinery I purchased on 1st January 2022. So as soon as I purchase this plant and machinery, I cannot use it. I need to install this plant and machinery, right? So I need to spend installation charges, and I have to call engineers to install the plant and machinery, and I have to run the plant and machinery to see whether this plant and machinery is ready for use. Let us say this plant and machinery installation took 2 months. That means this plant and machinery completed the installation by 28th February. Installation is completed by 28th February. It took 2 months for me to install the plant and machinery. When did I buy this asset? I bought this asset on 1st January 2022. That is an acquisition date. When did I complete my installation? By 28th February. Then that asset is ready to use from 1st March 2022. So I started capitalizing this asset from 1st March 22 and I put in use this asset from 1st March 22. Hence my depreciation also will start calculating from 1st March 2022. So this is the capitalization date. 1st March is my capitalization date. That is when I capitalized this asset. I started using this asset. So my depreciation will start from 1st March 22. So if you want to do the asset accounting, you also need acquisition date, capitalization date for further accounting. Clear? Right. Next one, useful life of the asset. This is also another important input required. When we purchase an asset, we also need to estimate useful life of that asset. We need to estimate, underline, estimate the life of useful life of the asset. Suppose if I purchase plant and machinery, engineers will confirm, saying that this plant and machinery can be used for 20 years. This is the estimated life of this asset. After 20 years, this asset is going to be useless. It is not going to produce anything. It will become scrap. I purchased a laptop. This laptop can be used for 5 years. So, my estimated life of this laptop is, useful life of that laptop is 5 years. I purchased a vehicle. Estimated life of that vehicle is 15 years. So, I can use that vehicle for 15 years. So, whatever asset you purchase, you need to estimate the useful life of the asset. Why this useful life of the asset is required? This useful life of the asset is required to calculate the depreciation accordingly. So, useful life of the asset is also an important input for us to account fixed assets. Clear? Next one, certificate of completion. What do you mean by certificate of completion? This is another important point which we all need to understand. Let me clarify that. Let us say I started constructing a building. So, I started constructing the building on 1st January 2021. Constructing a building. What do I do as a part of my construction? I keep buying bricks, cement, steel. I keep paying labor charges, buying electric equipment. So I need to keep buying, these kind of, materials for constructing a building, right? As and when I start buying bricks, cement, steel, where do I need to book these expenses? I can't straight away book it to building account because building is not ready, it is under the construction. If you remember in my previous video, if any asset is under construction, we need to debit these expenses to a special account called CWIP, Capital Work in Progress, right? So as and when I buy bricks, as and when I buy cement, steel, and as and when I start paying labor charges, I keep debiting them to CWP account, Capital Work in Progress. I need to keep debiting this account and creating supplier account, and the process continues. Till what time this process will continue? Till such time the building is completed, you need to keep debiting your building related expenses to CWP account. Where do I show the CWP account? I will show CWP account in fixed assets only. But is building ready for use? Is building construction is completed? No. So, the CWP account will continue to be there in fixed assets. I'm not supposed to charge depreciation because the work is not completed, building not ready for use. So, whatever expenses I keep incurring, towards this construction will be debited to CWP account. Once this is done, once these expenses are debited, once the construction is completed, what we need to do is we need to get a certification from the chartered engineers. What do? They come and visit the building and they will see whether this building is completed in all respects and whether this is ready to use. Once they give the certificate of completion, yes, this building is completed, this can be put in use, you can start using, they will give the certificate of completion. Once you get the certificate of completion from the chartered engineers, then you can start capitalizing this asset. From CWP account, you will transfer the amount to building account. This is the capitalization of building. When do you transfer this to building account? Once you get the certificate of completion saying that this building is completed in all respects, you can start using this building and then you can transfer this amount from CWP account to building account. That is when you need to start calculating the depreciation as well. So what is important here? Whether the asset is completed or not, how do you know? So chartered engineers, they need to provide a certification saying that yes, this building is completed. That is also another important input for us to account fixed assets. Clear? Similar way, software development, for example. You started developing a software. You keep incurring, paying salaries to the, IT people, and you keep incurring some expenses. You will be debiting that to CWP account. Once the software is completed, then you will transfer that to, you capitalize that, software. Someone has to certify that this software is tested and it is working fine so that you can start capitalizing this asset. So similar way, so certification of completion is very important input for us to do the fixed assets accounting. Next, depreciation method and percentage. What method we are supposed to follow? Is it straight line method? Is it written down value method? Which method of depreciation I am supposed to follow? That is also another important input for us to proceed further. Next, salvage value. What do you mean by salvage value? Let us say plant and machinery, useful life is 20 years. Right? You started depreciating, calculating the depreciation of that plant and machinery. 20 years completed. On 20th year, that asset should become zero. But if you sell that asset, that plant and machinery, after completing 20 years, you might realize some value after selling that plant and machinery after 20 years, maybe as a scrap value. So whatever value you generate after completing 20 years of useful life, that value is called salvage value or scrap value. So estimated scrap value also is important for capitalizing an asset. So you need to input that information in case if you have that information. If you don't have that information, you can put as zero as a salvage value and you can start calculating the depreciation. In case if you have that information, if that information is available, it is always better to put that salvage value also while capitalizing the asset, so that depreciation will be calculated accordingly. That I will tell you the formula, how straight line method depreciation will be calculated, how the salvage value will be considered. All those things we are going to discuss in coming slides. And another important, in case after 10 years or 15 years of that, using that asset, you have decided to sell that asset. You don't want to continue that asset. You have decided to sell. Then what is required? When are you going to sell that asset? Suppose you have decided to sell that asset. the sale date is very important. When did you sell that asset? That you don't require to get that information at the time of capitalization. But I just wanted to let you know this input is also very important because you need to calculate your accumulated depreciation and deduct from your capitalized value of the asset, and at what rate you sold that asset, you need to deduct that and see whether you got the profit or loss, right? So for sale of asset, the date of sale of asset is also very important. So that is the reason I'm saying this is also an important input for fixed assets accounting. So these are the important inputs. There are many other inputs required, but I'm talking about very important inputs required for fixed assets accounting. So I'm stopping here, guys. I'm going to talk about depreciation methods and journal entries in my next video. I hope the concept is clear. In case if you like this content, please like my video, subscribe to my channel, and share this video with your friends and colleagues.